Earnings reaction still continuing in. So let's address another set. We've got the management, the group CFO of Vaibhav Global joining in on the show right now. Nitin Panwad on the show right now. Nitin, hi, good morning. Great to have you on the show today. I will talk about your diversification to Alcobev because that's got the market interest. But first, let me talk about the numbers because, despite global headwinds, you reported a very strong set. And you've managed to exceed your earlier guidance as well. But having said that, in Q1, you've cut your guidance from 8 to 12% to 7 to 9%. Would you want to now revise the guidance for FY26?
Yeah. Thanks for having me, and thanks for the compliment about the results. We're pretty pleased with the results in the past quarter performance, especially in US and UK both territory. But talking to your question about the revising the guidance, we are still taking a cautionary approach that what is currently going with the India-US trade deals and the higher cost of living crisis in European markets. So we take a cautionary approach to stick on the same guidance, 7 to 9%. But if there is a revival turn in the economy or the tariff good news, we may see the higher numbers.
Okay, so how much of the total sales now come from your digital channels versus TV, and what's the overall target mix for the next 2 to 3 years?
Digital is turning out pretty well quarter over quarter. It is now hitting over 40%, and we are expecting in the next 2 years it will hit 50% or more, especially in US and UK both. The way digital growing, digital expansion through the mobile apps, OTT, and the different proprietary websites that we have. So that is turning out pretty well. And this quarter highlights especially more about the in UK business part. In past some quarters, we are seeing some slowness in the margins side in UK business, but the ideal world is now resulting pretty well. And continuously past 2 quarters is now generated low single-digit profit margins, which in past many years it was not generated even before the acquisition of that business. And so that is resulting, as you can see in the PAT line also, which is almost 71% improvement, is partly related to improvement in UK business and also US business showing the decent growth in past quarter.
Nitin, let me get a sense. Hi, good morning. First off, this is Harsh here. Let me get a sense, Nitin, on how US is playing out, because it's your key market. It's where a majority of your sales come from. What's helping you stay well in terms of on course, in terms of growth, despite US tariffs? What's helping you do that? Give us a sense.
Sure. Yeah, tariff, I think 6 months back it was announced, and it was new for us like all other retail players. But the agility in the business and the wider supply chain across the world helped to fight back against the tariff. And sometimes it's kind of like a blessing in disguise that we have also started our part of the manufacturing operation in US, where the casting process starts in US, and then bring back item to India, and then stone setting and the polishing the item and send back to America. That is helping us to chargeable tariff only on the value addition part of India. So whatever the reciprocal tariff has been announced is not applicable on those parts which the casting happening in America, and then all the other process of polishing and setting from India and back to the US. So that is helping even the lower tariff what we were paying in the previous years. And similar kind of process also on the plain silver jewelry, plain gold and metal jewelry. That is bringing the gold or precious metal from America and doing the job work and then creating chains or these rings and then sending back to America. It's triggering only tariff only on the value addition part. So it will give us even a better of position compared to other competitors who don't have such kind of capabilities in the business.
Perfect. So you set it up very well. Give us a sense as to how festive works out for you, because that is traditionally your strongest quarter. How is stocking playing out in US as well as in European markets? And is this year, are you going to leverage more on Europe than the US? Trying to get a sense.
Yeah. So see, the festing is now coming. November is the biggest season time. Black Friday, Cyber Monday, and the Christmas time. So we are with our new offerings that we have, new product launches we expecting that tariff will this festive season will continue to well for us, and then with the results we are expecting within the guidance that we have given 7 to 9%. If we see the more good news about the revival in the economy and the tariff part also, we may see the higher numbers, but we are full ready for the festive seasons in our product categories and categories expansion.
Okay. What does it do to your full year guidance, Nitin? Give us a sense. Would you care to up the guidance to double digit in terms of top line, given the kind of performance you've done in H1 despite all of the headwinds?
Yeah. So we are more not worried about tariff because tariff we have found the ways that how we can do it and how we can make more effective cost of the product, but more worried about the customer confidence on the economy per se, that if tariff really the other retailers will pass on to the consumer and consumer might be cautious, that confidence may go down, that we are more worried about in that part, and that's why we are more cautious that how the things will shape up, and we have seen that not across the America the tariff cost is not 100% passed on to the consumer, but some of the costs are retailer is absorbing and then passing on some of the cost to consumer. But we are more cautious approach taking that consumer confidence should not go down, and if it remains same, then we are in better of situation and can be even higher numbers.
Okay, great to have you on the show. Thank you so much for your time today, and Nitin highlighting all that the quarter has been like, and of course what the future visibility as well is looking like. Telecom, that's your big story today. Let's